I mean, our stock market took the first dip yesterday because of Iceland. So Iceland's already cost us a lot of money. But that dip is peanuts compared to what it's gone up. And we have an unbelievable future in that stock. That stock market is going to be doubled. We're going to hit 50,000, and that stock market's going to double in a relatively short period of time because of everything that's happened.
No words, just love, guys. No words, just love. I am trying to activate the terminal, the terminal, not the Bloomberg terminal, the TradingView terminal. And let's see, I haven't checked actually in the last 5 minutes, but woo, wow. Taco Wednesday. We didn't get Taco Tuesday. I thought we were going to Taco Tuesday. We didn't get Taco Tuesday. But yes, sir. Yes, sir. We got Taco Wednesday. Holy cow. The Qs are up 2%. IWM is up almost 2.5%. Bitcoin, actually, that's not Bitcoin. That's the ETF. Bitcoin is above 90K. I don't, anyways, no comment there. But holy cow. AMKR high of day, on semiconductor high of day, almost at new 52-week highs. ENS high of day, Zeta high of day. I mean, Kratos is still 6% down, but like, I mean, come on, guys. If you've been long, this thing is 76. It doesn't really matter. OSS one-stop shop high of day, Sina high day. I've actually been looking into Sina lately. Small starter, no stock talk weeklies in that one, but still need to look into that one. No position there. Nebius is about to go green. Iren is about to go green. Novo Nordisk is almost back at $60. MongoDB is green. Brother, Taco Wednesday is back. I was going to get Hawaiian food tonight. But I mean, maybe Taco Bell might be the proper choice in this case. Welcome back, everyone. Midwest, how are you doing? Ticker Tapper X, how are you? Jody, what is going on? It is certainly a beautiful Wednesday. At least that's what it looks like right now. But I mean, we can easily reverse it. It can easily come back. We'll see what happens. But I did not see this coming like an hour ago, less than an hour ago. I mean, what? Just like less than an hour ago, where were we trading? Where were we trading an hour ago? I mean, good Lord. Well, see, this is like kind of weird. Like someone new, and then it kind of sold off. Someone new down here. Like it's just, come on, someone new. And look at the, oh wow, we're just pushing new highs. We are coming back on the, oh wow, we went above the 50-day moving average on the Qs. That is good news. Breaking above the EMAs right now. Actually, this would be pretty bullish. If we can not have this EMA crossover here, that would be very good for the markets. Very good for the market. SPY, of course, is back above the 50-day moving average. Cannot stay below the 50-day moving average. This thing like literally does not want to stay below the 50-day moving average. And we're coming up above the 20-day moving average here on SPY. Guys, damn. This is the reason why I had to get super bearish yesterday, because like, how many times have we tried to come below the 50-day moving average of SPY? Like we never stay down there. This is what I drew yesterday. And like, look at this. Like we had the largest red day since October. And like, it's just what's causing the flow upward. It's Taco Wednesday, baby. We're going to be we're going to be getting some Crunchwrap Supremes later. We're going to be getting some chalupas, some nachos, Del Toro. We're going to be, the market is just all up in Taco Bell, getting that $5 meal box right there. I mean, it is just ready. It is primed and ready. It is primed and ready to get up there. And it sure is. I mean, I'm actually kind of glad Zeta's green today because it just was not looking good this morning. But I mean, things are looking pretty good. Zeta's back over here above the 50 EMA. Great thing. I got stopped out of my path position, guys. I sold it this morning. Lower than here, unfortunately, but it is what it is. We'll look to recover. We'll look to get back in there if we get above the 100-day moving average here. We'll see. We'll see up inside. Anyways, let us get on with the show. I mean, really, we could just end the show right here on a great note because I don't, I don't. All right, we're at 6:18 right now. I should just end the show right here. Like that should just really be it. I don't want to, I don't want to see this move fade. That would really, that would not be good. But we're going to talk about Trump's a little bit of his speech at the World Economic Forum, which is where he had his little speech. And I don't know if you guys were looking at the news headline yesterday. Trump was on his way to Europe, and then the plane turned around, maybe because he forgot his toothbrush or something. No, it was a minor mechanical failure, and then he went back in there, and it was like, oh my, Trump is turning around. But something happened. It's like, no, it's just a plane issue. I don't know. Forgot his toothbrush. Maybe forgot his charger. I don't know what it was, but I mean, he got back there this morning. I played that clip for you guys as soon as the podcast started. And man, he is bowled up for this year, talking about peanuts. What we saw recently was peanuts. The pullback was peanuts. And just get ready for a double in the stock. He said 50,000. What is 50? Is he talking about the NASDAQ? Is 50,000 the NASDAQ? Yeah, because that would be double from here. Let's actually take a look here at the stuff. I don't even have the Dow on here. Okay, so he was not referring to the Dow because the Dow is at 50,000. He's talking about NASDAQ. So, ladies and gentlemen, we have graduated from talking about the Dow as a stock market to now talking about the Qs. That is definitely bullish for tech. And he is talking about a double on the NASDAQ. Like, oh, whew. Yeah, no, we're gonna dig a little bit into Netflix later on. I got a segment for that piece. Wow. You know, I think the part we got to get an EMP on here. We got to get Wolf Ryan on here. That guy's a futures trader. He is a freaking legend when it comes to futures. How much did the NASDAQ go up? Wow. NASDAQ went up 800 points in just a matter of less than an hour. The market is definitely bulled up over here. Yeah, we're going to get EMP on here, talk about futures trading with you all. We're going to get some more guests on here. Some of the Wolf crew on here because, like, you know, I got to show those guys some love. I got to show us some love, right? Because it's been a great year so far being on this platform. Speaking of being on a platform, Wolf Financial _ youtube.com/Wolf _ financial. youtube.com /@Wolf _ financial. If you are on my channel, I'm going to cut the stream and we will be 100% on the Wolf Financial. And let me just throw the link on here so you guys can go ahead and check it out. Make sure you show some love on the Wolf channel. All right, so here it is. Put it in the chat there. Oh my goodness, why does it do that all the time? I don't know, guys. I'm just like super excited. The market is up today. It is just great. And you know, to be honest, I was even green all day, and just this is like the cherry on the top. All right, so that is the link to the Wolf Financial. And I would say head over there, like and subscribe, and we're going to continue the stream on there, everyone. Man, all 32 of you people over here just watching all the excitement in the stock market right now. This is just a beautiful move in the stock market right now. If you're bullish, if you're bearish, I mean, I don't know what to say. You got bearish at the wrong time. You know, we were below the 50-day moving average on the SP 500. But you know, you have to look at like the history of what's happened here. Once you get below the 50-day moving average, like the thing always recovers. Like if we were going to get bearish, like you need to like wait until it goes lower or at least stays below there. Otherwise, they're going to buy this sucker up like they've done every single time. Now, it could come back. It can really come back. Like, who knows? But it's just maybe some hedges if you wanted to. But like if you were full on bearish yesterday, you're going to be in a lot of trouble today. You know, I mean, who knows? Maybe you'll be right. But like I would not want to be bearish right now if I was anything. I mean, we're coming up over here in the SPY 20-day moving average. We broke through the 50-day moving average, recovered it back above the 50 EMA. We're about to recover the 9 EMA right now. We're above the 21 EMA. We're hitting the 20-day moving average. I mean, it's just wild, guys. Hey, thank you, Midwest. Thank you very much for joining up on the Wolf Financial channel. All 18 of you, the other 20 of you, I'm going to cut the stream on my channel. I'm going to be completely dedicated to the Wolf YouTube channel. So go ahead and tune in. It's in the chat there. See you all on the other side in case you're on my channel. If you're on the Wolf Financial channel, be prepared. We got a great show coming up. All right, so we're going to go over exactly what happened here. Like why the market is rippity right now, and why BM&R turned green on the day. I mean, BM&R shareholders, like that's a lot to ask for, and you're up 4% today. Like take it, guys, take it. All right, so this is the official tweet from Donald J. Trump, or not tweet, my bad. I meant the Truth Social. And it is over here. All right. So is that too big? I think that's good, right? Yeah. All right. That's good. All right. So we got this truth post here, which basically initiated this entire rally. Based upon very productive meeting that I had with the Secretary General of NATO, the North American Treaty Organization, Mark Root, we have formed the framework of a future deal with respect to Greenland and, in fact, the entire Arctic region. Now, that was like, wow. Okay. Like, I think that is what really surprised the market. Like this morning, it was like, okay, we're going to be good with Greenland, whatever. And then the fact that he dropped the bomb on, sorry, not dropped like the physical bomb, but like laid this egg here. The entire Arctic region, like that was like, whoa. Okay. Now let's think of some massive supply chain and resources we can get from these regions. Like that is seriously something. This solution, if consummated, will be great one for the United States of America and all NATO nations. Based upon this understanding, I will not be imposing the tariffs that were scheduled to go into effect February 1st. Okay, now that's a big one. He will not be putting in those tariffs for Europe. That is definitely a Taco Wednesday, everyone. That is that is a Taco Wednesday. That is a Taco Wednesday right there. Additional discussions are being held concerning the Golden Dome as it pertains to Greenland. Further information will be made available as discussions progress. Vice President J.D. Vance, Secretary of State Marco Rubio. Marco Rubio? I thought it was Mark Rubio. All right. Vice President J.D. Oh, I already said that. Special Envoy Steve Witkoff and various others as needed will be responsible for negotiations. And the long dash Trump uses ChatGPT. They will report directly to me. Thank you for attention to this matter. Donald J. Trump, President of the United States of America. Let's double the NASDAQ, baby. Let's go. Let's go. Let's go. Let us go. What did I switch? Did I switch something? My bad. I apologize. Anyways, guys, got a little bit excited there. Let's take a look at the markets again because he did mention the Golden Dome. So I'm going to go ahead and open this up right here. Now we have the Golden Dome. First stock I think of is ASTS. That's still red in the day. Let's take a look at our big watch list here. We have China just ripping right now, which is good news. Amazon is green. That like barely ever happens. Meta is up 2.5%. That's good to see. Oh, wow. Nvidia is up 4%. That is a massive bullish, well, not a bullish engulfing channel, but you do have that gap up there. That is technically a bullish engulfing channel. That is a very bullish sign. Nvidia is just ripping everyone's faces off. Micron's up today. I mean, what other green day would there be without Microsoft? I saw Micron being green today. SanDisk, of course, is up 10%. I mean, nothing less than double digits, of course. Yeah, Iron went green. All the data center stocks went green. CoreWeave is red. The market is healing. ASTS is red, but I mean, the thing, it broke $100 recently. Rocket Lab is down 1%. Okay, so that's good too. Wow, Rocket Lab pulled all the way. Where did my screen go? Let me just pull that back up. Yeah, Rocket Lab. I didn't realize I pulled all the way back to $82 yesterday. That's wild. Congrats to everyone who bought that dip. It's crazy. Alpha's green because now we have tariffs not coming in. It's good. And Grab is red. Okay, so now we're back to normal. Grab is red as usual. I don't know why this thing always turns red, but I guess it does. Lemonade is up 8%. All right, so great. Oh, the market is healing. IONQ is down. Rigetti is down. These are down. Now, mind you, IONQ is consolidating here, which it usually does. This is actually a very interesting chart bouncing here on the 200-day and the 100-day. Very interesting chart. Anyways, guys, things are looking pretty good here. Just went through that tweet. Now, what I wanted to talk about next was go a little bit over the speech that Trump had at the World Economic Forum. I mean, is this like really necessary at this point? Because we kind of got the latest news. I was going to play that. I mean, I guess you guys can go ahead and check out the speech later on. We are going to be constrained on time. I feel like we're going to be constrained on time. I wanted to get into Intel and some of the semiconductor stocks that have been running pretty hard, basically since the beginning of the year. I mean, what's Intel at right now? Intel is at 54. Wow, that thing is pulverized above $50. That's crazy. This is the biggest move on Intel we saw since 2022. Not the biggest move, but this is reaching levels it has not seen since early 2022 when we topped out. That's crazy. Wow. Intel's all-time high is, oh, that was in 1999 at 78 bucks. That's still crazy. This is almost a triple since Donald J. Trump bought this stock. I don't know. Trump doesn't miss, apparently. We're going to talk a little bit about Intel. They have earnings tomorrow. Going to go over some numbers there. Yeah, dude. That's amazing. Congratulations. We're going to go over Netflix. Is this a buy right now? Netflix is trading at, okay, it's down 2.7%. Not as bad as this morning. It was at 82 bucks. So I guess that would be another, yeah, that'd be down 5%. So it's still red today. We're going to go over everything on this one. We're going to go over the earnings. We're going to go over the financials, where the trend is headed. We're going to go over the subscribership. And we're also going to go over some TA. And then we're going to look at some simple TA strategies. Going to look at my favorite holdings, or was my favorite holding. Not actually my favorite, but we're going to look at why I stopped myself at a path. We're going to look at why I'm still long Zeta. Why Novo Nordisk might be setting up for a decent bull run here in the coming future. So I'm probably going to initiate a position. Well, not initiate. I'm probably going to, well, I'm going to tell you guys the position I have in Novo Nordisk. Actually, I'm right on my Novo Nordisk position, but I'll talk about that position shortly. Okay, so let's get into Intel. Why is Intel running? Well, they have earnings tomorrow. So let me pull up the earnings hub, the trusty, rusty earnings hub. The Qs are still sitting around highs of day, which is good to see. I have to log in over here. 1 second. All right. So logging into Earnings Hub, let me go ahead and share the screen. And we have over here, UAH, Godly Candle. Oh, let's check this out. I mean, yeah, that's a bullish engulfing channel. I definitely think healthcare is going on a little bit of a run here. I'm just looking at it on the side real quick. Yeah, Novo Nordisk almost up at 60 bucks. That's setting up pretty nicely. So I would like to go over that one before the close for sure. All right, so we have Intel reporting earnings tomorrow. Now, what is the deal with Intel? I mean, let's look at their revenue. It's basically flat for the last 5 years. EPS is just flat for the last 5 years. They did beat the earnings last quarter. They beat revenue last quarter, I believe. And we have a slight higher estimate, looking at 4 cents for this quarter. They've only beat 12 out of 17 times. So like, that's still pretty good. But I would argue that the bullishness or the bull case for Intel is not what their earnings are today, is not what they're going to report tomorrow. It's not what their revenue is tomorrow. It is basically the thematic approach. All right. So you have basically a company that the United States of America has a stake in, that NVIDIA has a stake in. That is the premise of onshoring for foundries, other than TSM, of course. That is designing its own GPUs as well. That is the Gaudi GPUs. That is going to be part of the CPU market when it comes to the ramp up for personal computing and the AI cycle for personal computing. We've seen AI from the LLM perspective and ChatGPT and all those chatbots and everything. We've seen AI from the application perspective, but we never saw it from the consumer standpoint. Like, we're just starting to see that cycle happen. And I believe that we're just starting to see that cycle for laptops, desktops, for cell phones, mobile devices, and everything, iPads, all that stuff. And Intel is supposed to be designing and fabricating a lot of these chips in the US, which they obviously do have the backing. So like once you have like the government on your side, it's kind of a win-win there, because it's like you basically have like a floor for the stock, right? And the floor for Intel has been $20, and we are almost a triple from there. And they have earnings tomorrow. And the way the market is pricing this in is that there's going to be some really good commentary and guidance from Intel. If let's take a look at Fiscal AI. By the way, shout out to Earnings Hub. Those guys are awesome. I use Earnings Hub all the time. And Fiscal AI, shout out to Fiscal AI. Let me bring this up over here. Earnings estimates for Intel on a quarterly basis. I need this in billions. And let me do change percentage. All right, so we have here that revenue for coming up tomorrow is expected to reaccelerate from, or to expected to accelerate from 5.9% last quarter to, 7.8% the quarter coming up. That is the mean or the average. The median is about 6.6%. The high end is 13.6%, which, I mean, if they hit those high end estimates, like the stock is going to be up like 10% tomorrow after hours. On an annual basis for 2027, we have revenue accelerating from 2.7 to 5.4%. So anytime you see revenue accelerate for a company, that means that analysts have to re-rate their guidance. Re-rate their estimates upward. That means they have to change their projections and their models and basically tell their clients, hey, you need to buy the stock because we haven't reached these levels of revenue growth yet, right? So ideally, to see the price appreciate, it's not just about buying stocks that are undervalued, but it's about buying stocks that are going to accelerate revenue, that are going to accelerate earnings or profitability, that are going to expand margins. Because whatever Wall Street is forecasting is pretty much where the stock is priced at, right? If Wall Street is saying that these are the estimates and they come in line with those estimates, we've seen that happen before. Nothing really happens to the stock, or sometimes it goes down, especially in the market that we have today where it's very expensive, right? So if stocks are expensive after they report earnings, then more times than not, it doesn't exactly go up. But if estimates are forecasting the price of a stock in the future, and they come in and they say, we beat those estimates, that's why stocks get re-rated higher most of the time, especially when it's part of a massive secular trend in terms of US onshoring. And this is the reason why AMKR is working today, because AMKR is basically the only packaging company that's housed in the US that's strategically located in Arizona near TSM, and probably going to be packaging for a lot of these fabrication plants in the US. And that's the reason why On Semiconductor is working too. It's also housed in the US as well. They're basically one of the only major power chip manufacturers in the US at the profitability at their scale. And they're planning to reaccelerate revenue from minus 10% all the way up to 10 to 12% in 2 years, right? So if I look at On Semiconductor over here, these are the analyst estimates, right? So analysts are forecasting 10%. This is the reason why the stock is where it's trading at today versus $45, because analysts were not forecasting this a couple of months ago. They were forecasting much lower. I wish I saved that data, but it was like around 2 to 3%, right? And this is the reason why the stock market's going up. Atlanta Fed GDP now. Because the GDP estimates is at 3% and it's at 5% now, right? This is why the stock market goes up, because the consensus was at 1% and then it ended up being 3%. And then we're going even higher in those estimates. It is not the first derivative of seeing what it's growing at It is the second derivative, the rate of growth, acceleration. When you have the rate of growth accelerating from 3% to 6% for a multi-trillion-dollar economy, you're going to get a double in the S&P 500, especially if you have the president of the United States in on it. Now, I don't know if it's actually going to go, if the NASDAQ is going to be double from where it is here in a short period of time, but I'll tell you something. If it does, your AMKRs, your ON Semiconductors, your Amazons, your Metas, I don't know about BM&R guys, but stocks will be higher. And this is the reason why you are seeing the stock market get much more expensive every single day, because expensive is being re-rated higher. Right? Imagine if I just gave that whole speech and the market was down. That would suck. But it's not. It's not down. All right. It's up. It's up. So, you know, that's all I can really say to that. I mean, that's really the thesis when it comes to Intel. Like, it's not about like what they're earning today. It's not about how much revenue they have today. It's about how much revenue they're going to have in quarters or years. And the way this is moving is that they're not going to grow 7% in the next couple of quarters. They're going to grow way more. And if it doesn't happen next couple of quarters, they will be in double-digit growth. That is why the stock is moving. That is why AMD is up 8% today, because they are going to reaccelerate growth. That is why ASML is at all-time highs today, because they are going to reaccelerate growth. Now, hey, Sam, why was ASML down here at $600 back in April 7? Okay. Again, let's take a look at the numbers. Like, guys, this is very simple. This is very simple. All right. Why stocks go up. Like, it's just, let me title this, why stocks go up. All right. They go up not because of the first derivative. Repeat after me. It is not the first derivative. It is the second derivative. It is the rate of growth, or some cases, the rate of shrinking, right? And that's why stocks go down, right? So let me go back to Fiscal AI. And I was just talking about why ASML is at all-time highs. And I'll tell you the reason why. Because on a quarterly basis, what do we have? April of last year. April of last year, they reported, before April of last year when it bottomed, they basically were growing at 28% year over year. And the market looked at this and they heard the guidance, right? So right over here, 28% year over year was the previous earnings that they reported. And the market looked at this. Actually, it was even lower before that. But the market looked at this and they're just like, well, you have China issues, and we're seeing all where they get a lot of revenue from China. And you didn't hear good guidance out of China, obviously, during the tariff issues, during the chip export controls and all that stuff. And ASML produces a lot of machinery and lithography machines in order to fabricate and design these chips, basically to put in I got a little bit distracted there. Basically to design the circuits on the chips themselves, right? That's the whole point of this thing. So if you have export controls in China, right? And then China's going to turn around. They're going to say like, well, you know, then that means we need to hold on to whatever we have. Whatever the whole story is, the bad guidance they provided for China basically told the market, hey, we might possibly slow down our revenue next quarter. And that's the reason why the stock traded so low, because the market was afraid of that, again, second derivative, declining revenue, slowing down the revenue. But what happened? They did the complete opposite. They accelerated revenue on a quarterly basis, right? So it doesn't have to be quarterly. It could be last 12 months annually, but you know, it is always that second derivative. They reaccelerated the 46%. And then last quarter, they came in at 0.7%, but I believe they had really good guidance. And also there's a lot more thematic approaches to this, other than just, of course, their top line revenue. If we look at their EPS, actually, what is the reason why? Am I looking at the right direction? They must have given really good guidance in order to make up for that slow growth. Oh, seasonality. That's right. I'm looking at quarterly. Okay, this makes a lot more sense. All right, so they're at 2.6. Okay, so I forgot. There's a lot of seasonality effects, especially when it comes to a lot of these chip companies. And if I look at a quarterly basis, oh, only 0.7% is not a lot. But if you look at the last 12 months, which is basically the last 12 months the last 4 quarters, and taking that growth rate for the previous 4 quarters, that's how you get the last 12 months. And yeah, I mean, they're in double digits. They're in 20% range, and they probably gave good guidance. And that's the reason why the stock is continuing to go up, because they expect this to accelerate, right? So look at this, 7%, minus 1.6%, minus 1.9%, 2%, right? Let's look over this 2024 period of time. Right, so the stock went down. There you go, simple math. Second derivative, guys, and easy example, Palantir. I don't even need to bring up anything. You guys already know Palantir like the back of your hands, okay? Palantir re-accelerate revenue. They're guiding for like 50% plus revenue or something like that. All right, guys, the market's wild. That's just how the market works. It's the estimates. Are they beating estimates? Yes. Are they accelerating revenue? Yes. Are they part of a secular trend? Yes. Are they expanding profitability? Yes. Buy the stock. Simple as that, all right? Now, here's a great example of stocks that people usually do buy, which could work. It could very well work, right? Like this can work. It could work for these companies because that means that they have a large margin of safety. And that means that the story isn't as bad as things are. And the stock re-rates itself back to fair value, not to like all-time highs, but to fair value. So like that margin of safety. And the first thing that I'm thinking of here is Netflix, right? This is actually what I want to get to. So we're going to talk about Netflix right now. I actually have a clip from CNBC that I wanted to play for you guys from Netflix. So I'm going to go ahead and do that. I'm actually jumping all over the place right now with a few things because the time is just flying by right now. There is this CNBC clip that I wanted to play from yesterday after Netflix released its earnings. And of course, it's going to give me this weird link. I got to work with Notion here. I don't know why I keep doing this. All right. So I'm going to go
straight to Julia Boorstin.
Here we go. Well, actually, let me make sure I'm sharing the sound here. I was not. Okay, here we go.
It's got the latest from Netflix earnings just crossing. Julia.
And Netflix earnings crossing the wires. The headlines showing a beat on the top and bottom line. The company reporting a 56 cents in earnings per share. That's a penny better than expectations, while revenues of $12.05 billion, just ahead of estimates of $11.97 billion. Now, if you take a look at the stock, it's down. That seems to be based on some of the guidance. Wires reporting that the company sees first quarter earnings per share of 76 cents versus the 81 cents that analysts had been anticipating, and revenues just a hair below expectations, guiding to revenues of $12.16 billion, pretty much in line there for revenues. So we see shares are down nearly 4% right now. One other key headline to note here, the company, which stopped reporting quarterly subscriber numbers a year ago, reporting that it has crossed 325 million paid memberships in the fourth quarter. The last time the company reported a year ago, they had about 302 million. Back over to you.
Okay, that was a lot shorter than I thought. I thought I had a solid 2 minutes there. No pun intended. That's funny. I said solid. I thought I had a solid Sam. I thought I had a solid 2 minutes there to kind of recompose myself. But I didn't exactly get that offer there. But yeah, so let's go over the Netflix earnings. Netflix earnings. I'm just going to bring it up over here so that way you don't need to see all of these tabs that I've opened because I don't know, people are like very sensitive when it comes to a window with a bunch of tabs. Okay, so here we go. Netflix revenue growth came in at 17.6% year over year. So they re-accelerate revenue by 20 basis points. Okay, that's good. Hey, Sam, I thought you said if they accelerate revenue, the stock's going to go up. Okay, well, let's move on. And I'm sharing the wrong screen. All right. So 17.6% growth. So they accelerated from 17.2 to 17.6. Great. Hey, Sam, how come the stock is down if they accelerated growth? Well, let me just get to the next point here. Operating margin, 28.2% to 24.5%. Boom. That will not look good, especially when you've been decreasing your profitability 2 quarters in a row. But they are guiding for 32% next quarter. Okay, not bad, not bad. Earnings power, down, down, down. Okay, so I am pretty sure this is a seasonality effect, though. Yeah, this is probably seasonality. So rate actually peaks around the summer, probably because the kids are home and everything. Free cash flow is flat. Yeah, that's not gonna. Oh no, those are the shares. Free cash flow is down. Okay, so we get to a bigger company like this. Excuse me. You get to a bigger company like this, it's a bit more, especially when you come to Netflix that's been trading pretty expensive for quite some time. All right. I believe the bigger issue here was in spite of having like really good, I still think these numbers are pretty good for this company, right? But the thing is, Netflix has been pretty expensive for some time. So in order to justify that very expensive valuation, they need to be pumping up more numbers and stuff, which they still have, but it just wasn't good enough for the market. But to be completely honest, like this is going to be the crux of Netflix right here, the Warner Brothers acquisition. They're going to buy Warner Brothers. All right. Like I don't think they want to forego that acquisition. They want to buy Warner Brothers for sure. And they're going to do whatever it takes to buy it. And they want to keep their shareholders happy, but it's very tough to keep your shareholders happy when you're basically diluting shareholders left and right for it, or whether it's all cash, you're going to take a loan for it. So the first thing was about diluting, then that's no longer going to be an issue. But now they're going to be buying it in cash, which means they have to borrow a lot of money. It's like, guys, the way the shareholders looking at this is like, look, we don't want you to buy Warner Brothers if it means mediocre growth, same profitability, but of course, reducing the amount of power cash you have in balance sheet for future acquisitions, whatever it is in your investment, your CapEx. Like there's a lot of moving parts when it comes to this. The point is that Netflix is not a cheap stock. It's cheaper, but it's not a cheap stock by any means. Because if I look at seeking, and I'm going to do the fiscal AI. Let's mess with the fiscal AI over here. If I look at Netflix, let me look at that trailing valuation for the price to free cash flow. Actually, I do operating cash flow. That's a bit more consistent here. Quarterly basis. She's loading. She's loading. Price to operating cash flow. Go down here. Oh, wow. That's definitely not going to give me what I want to look at because that was including 2022. Yeah, I mean, Netflix has been trading at, especially at its recent peak, it was trading at 70 times price to operating cap. Like, guys, that's expensive. That is insanely. Amazon is trading like around 20. Meta is trading around 20. Netflix is trading at 70%. Now, mind you, they're growing it at like about 25%, which is pretty astronomical when you think about this company. But I believe this has been priced in for quite some time, and that's the reason why you saw this downtrend over here. And when you look at what I shared over here, when it comes to operating margins, it's contracting, right? That's never a good thing to see to shareholders. Now, this is going to be good, right? But what is Netflix fair value? On a historical basis, it looks like it's right around 45. So, or maybe, yeah, let's just be a little bit more bullish here. Let's say it's 45, all right? So 45 is the price to operating cash flow that should bring it back to, I guess, historical fair value comparison. I don't want to really bring it to like what their fair value is because I don't want to whip out the calculator and start doing a bunch of crazy stuff in front of you guys. And moreover, I don't necessarily look at that stuff too often. I'm not really a model type of guy when it comes to like calculating fair value, discounted free cash flow, discounted cash flow, reverse discounted cash. It's like, okay, I think it's more the thematic approach. But let's just say you're looking at Netflix, you're thinking about buying this stock. Let's be realistic here. I don't think Netflix is going back to all-time highs anytime soon. Why? Because this Warner Brothers acquisition is going to be a bit of a hangover for some period of time. It won't disappear for a period of time. And you also have that whole AI approach, which is kind of against the theme of AI, unless like they somehow bring it to their advantage. It's already assumed that Netflix is a cash cow when it comes to their advertising business. Like they're killing it, right? The thing is that how much more upside can you really get from Netflix if you just buy shares, right? So if we go from 35 to 45, let me look at my calculator. 45 divided by 35, that undefined. 45 divided by, oh, why is numlock not on? All right. Hold on a second here. Holy cow. I don't know where numlock is on this keyboard. All right. 45 divided by 35. I'm looking at calculator, by the way. So you have a 28% price appreciation. How long will that take? Let's say that takes about a year. So you're going to get a 28% gain if we do recover to the 45 level on price to operating cash flow basis, right? So if that does happen, you're looking at a 28% gain of Netflix. Now, there's a couple of things that need to continue happening. 20%? Hold on. 45 divided by 35. Now I got 28%. All right. So let's say Netflix goes up 28% from here. The market has to stay bullish. Okay. Like Netflix is not going to go back to this price if the market is not up higher from here. Because it's already weak on the chart. Like it's the chart looks terrible on Netflix, right? So I said I was going to talk about the TA on this stock. So let me go ahead and bring that up. Oh man, why you got to do that to us, Mr. Market? Anyways, the chart doesn't look that great. This is the weekly chart of Netflix. You're already below the 100-day moving average here. You're below all the EMAs on a weekly basis. You're below the 20, the 50, and the 100-day moving average. The 200-week. So you're below the 20-week, the 50-week, and the 100-week. You're also below the 21, the 50, and the 9 EMA on a weekly basis. The 200-week is down here at $63. On a daily basis, this looks terrible. This is a terrible chart. I talked about this yesterday. Okay, this is my issue with continuing to buy stocks that are on a massive downtrend, which we've been on a massive downtrend since we broke the 200-day moving average back here, and arguably ever since the last earning, ever since the earning before the last earnings, we've been on a massive downtrend. The last earnings was yesterday. Hold on a second. All right. So, I can't buy this stock. Like, you know, this is just for me, right? So if whatever your strategy is, however you practice your trading or swing trading or buying or holding, whatever it is, you know, have a strategy. Yeah. I would just always advocate, have a strategy, right? Don't be like all over the place. Like, hey, let me do this. Let me do this. Let me swing trade this. Let me do that. Let me buy this. Let me buy and hold this. Like, don't do that. Have a strategy. Okay. And you don't have to stick to one strategy for everything, but you just have to have a strategy you're applying to something and stick to it. Right. So for me, I'm not buying this. So it's already off the table because the chart just looks terrible. The market in itself, we're sitting at all-time highs and Netflix is trading below all the moving averages. So that's a no for me. Because if the market goes lower, Netflix is very likely to go lower. It's a mega cap, so it's going to move with the market, right? So there's also that too. Secular theme. Is it part of a secular theme? I mean, advertising and marketing is a major theme that it is nowadays. The thing is, they've already been part of that theme for a while, so I'd have to assume that this is already something the market has uncovered, and it's not going to be anything new. Like, they're not going to come out with a generational technology that's going to reaccelerate their revenue to 100% in the next couple of months. It's very likely all that stuff is priced in. So this would be more of like a reversion to the mean play versus like a secular theme play. So I don't want to be a part of that if that's going to be the case. I've done that before. Netflix isn't really my specialty when it comes to that, so I don't know if I want to do that. What else is there? I mean, those are really the big things there, right? So they are going to be next quarter. Let me bring this up again. Next quarter, they are going to reaccelerate their, they're not going to reaccelerate revenue next quarter. They are going to expand their operating margins, but arguably, if we look from 22 to 32 a year ago when they went from Q4 to Q1, they're going from 24 to 32, which means that they should be going higher since we're at 24. So plus 10, 32, plus 10, 34. Seasonality is having less of an effect here. They should be going a lot higher. So there's that for the operating margins, the decelerating revenue, which the market doesn't like. Free cash flow is already decreasing. This isn't a buy. This is not a buy for me. I don't see anything good on here, right? If you are a buy and hold person, maybe it might work for you. If you just want to buy it and forget it, you want to hold Netflix for 10 years. Okay. Maybe that makes sense. But like the near term swing trading alpha Romero, no, there's no alpha Romero here. Not for me. So that's my take on Netflix. That's the most I'm going to get into it. Obviously, the numbers are really good. Netflix is dominating streaming, like just not even close. I mean, if you look at Disney, like Disney is just not even close. And Disney cannot touch Netflix when it comes to streaming, right? Disney is ESPN, Hulu, Disney Plus, obviously. Yeah. Hey, Disney owns Disney Plus. Like, of course they do. So if we look at these segments over here, I would say when it comes to Disney, your best avenues here is a sports revenue, which just started 3 years ago. Entertainment is definitely a plus. Parks is their cash cow. Okay. Parks and recreation is Disney's cash cow. That's how they make almost all of their money. Streaming is turning profitable. Okay. So if I look at streaming, okay, experiences is parks. Okay. Like if the parks go downhill, Disney's going to double digits again. Operating income for entertainment. Actually, is that streaming? Okay, it's this one. No. Oh, wow. They really changed their stuff since I last looked at this. All right. That's going to be a monster to look at. I guess I need to dive into this a little deeper, but I'm not buying Disney. So I think I just made that a bit easier for you guys. Streaming is going to change a game, but I think it already has changed a game. I think the next wave for streaming is going to be, okay. So let me do a little bit of a solid talk situation. I should do a solid talk segment where I just give like my real thoughts. Like, I don't want to say real talk because I feel like everyone says real talk. Solid talk, right? Solid talk. What's the theme right now? AI, right? AI is across multiple verticals. You have your data center, your NVIDIAs, AMDs, you have fabrication, TSM, AMKR, on semiconductor. Actually, those are more designers, but TSM fabricates Intel, all that stuff. You have your software, and within software, you have your other segments. So you have data, which is Snowflake, Databricks, MongoDB, all that stuff. You have cybersecurity, CrowdStrike, Sentinel-1, Rubrik, and so on. You have mega cap software, Microsoft, Google, and Meta, and all those places are more in advertising. So AI is going across everything. Does AI work with streaming? Okay, we've already seen Google Veo and Nano Banana. We've already seen I forget the name of the one that OpenAI has where you can generate video. There's that one too. Like the video is obviously having a tremendous effect when it comes to AI disruption. Is Netflix going to come out with a user-catered format for generating movies on the fly to your liking based on what you watch on Netflix? I think they will. If they do, that's a whole nother ball game for Netflix. They are not going to be profitable in that in the beginning. In fact, it is going to be an SHIT show in the beginning. So if you're buying Netflix for that, you better have a lot of patience, right? The question is Netflix going to be the first people who do this? And are they going to be able to capitalize off it very quickly? We already start seeing that when it comes to AI for marketing, that you're starting to take hold of GEO or generative engine optimization. So there's that secular theme when it comes to Zeta and a lot of these marketing companies. Netflix isn't there yet with that instant generation of movies from AI, right? Like it takes like minutes, maybe like 5-10 minutes to generate like a 10-second clip with AI, right? And even longer sometimes, like hours sometimes to have like a 2-minute clip or whatever. That's going to require a lot of compute, and that's going to take a lot of time to perfect and release to production for a lot of people who watch Netflix. So I wouldn't buy Netflix for that theme. I think you're going to have a lot of time once that theme actually does come in play. So we'll see with that one. But Netflix is not a buy for me right now. So there it is of Netflix. So now let's go into the final segment over here. Simple TA strategy. I kind of went over it for a minute with Netflix. Want to go over some examples here. Dude, what happened to my... Oh, man. Hold on. I'm trying to wonder what happened to my terminal. My trading view. Not my Bloomberg terminal. I don't got 20 25K, however much it is to drop on a Bloomberg terminal. And I don't even know how to use one. So I should probably figure that out at some point. Yeah, probably not. All right. So a good example here for a simple TA. I literally use like 3 indicators here. Okay. There's volume, which is a great indicator. I use volume profile, but I don't look at it too often. Maybe like I don't really hone down in a stock for entry levels. I'll look at that. But other than that, not usually if I'm like browsing through a billion charts here. Okay. As Stock Talk Weekly said, and Stanley Druckenmiller looks through like 200 charts a day. I look at a lot of charts all the time. All the time I look at charts. That needs to be a confirmation I'm going to go long something. But volume is definitely a great indicator. So if I look at the NASDAQ over here, it looks like we're going to have another high volume day in the NASDAQ, and it's going to be a massive reversal. So from a volume perspective, this actually looks really good for the NASDAQ or the Qs, right? The EMAs, 9, 21, and 50. That's all I need. Now, this indicator, because I've coded all 4 of these indicators here. So EMAs on the daily, and EMA and SMAs on the daily, and then EMA and SMA on whatever I'm seeing on the chart right now, right? So I have right now the dynamic EMA and SMA. If I do it in a weekly, it'll show me those values for this chart. If I do monthly, it'll show me those values for this chart. But if I hide these and just do daily, then this is specifically for daily. This is not going to be the monthly SMA. This is not going to be the monthly EMA. This is for the daily. And that's why I coded that, to be able to look at that on a long-term chart or even a short-term chart. If I want to look at the 1 hour and I wanted to keep those on there, maybe the 30-minute, 15-minute, 30-minute. But I'm going to stick to the daily for now, just to keep it high level. And I'll just throw this on, right? So I'm looking at the daily chart for the Qs. And right now, we're probably going to close at high volume on the Qs. And this is high volume comparatively. If I'm just looking visually over here in the last couple of months, November were pretty high volume days. But of course, you had this massive red candle here, which is why it was a high volume. But if I look at the daily SMAs, dude, this is the 100-day moving average, the orange. The red is a 200-day. The blue is the 50-day. The green is a 20-day. And then for EMAs, the green is a 9 EMA. The 21 is the the blue is a 21 EMA, and the 50 is the red EMA over here. So the dashed red is the 50 EMA over here. And I also configured the bands here as well, so I can kind of see whether we're getting a crossover or not. Crossovers are important too. All right. So short term, I'm looking at the smaller digit moving averages, okay? EMAs, short term, I am looking at the 9 and 21, all right? Ideally, you want to stay above the 9 and the 21 to maintain a short-term bullish trend. We tried to get up there earlier when we pumped, and now we're kind of fading a little bit, but we're still above the 50 EMA and like a medium-term exponential moving average perspective. We had the crossover of the 21 EMA over the 9 EMA. Could be a little bit bearish here, and that's the reason why this turned blue. Okay. NASDAQ isn't looking too hot right now. SPY still looking a little bit better. All right. Can't get above the 9 EMA. It would be better if we did. If I look on a weekly basis, you're still above the 9 weekly EMA. Still bullish on a longer term perspective. The Qs kind of breaking down below the 9 EMA and the weekly. On the monthly, bullish. Simple as that. Bullish on the monthly. Bullish on the monthly. All right. So those look good. Let's go back to the daily for the SMAs. 20, 50, 100, 200. Okay. Oh, this is the monthly. My bad. Okay. So the monthly. Coming here, back testing the 50 simple day moving average. Somewhat bullish. Below the 20-day, somewhat bearish. So we're kind of in a holding pattern here. But since this morning, we bounced off the 100-day. Bullish move. bullish move, getting bought up. SPY looks way better. And arguably, this is your market, right? Rejected the 20-day moving average on SPY. We want to get back above there. Arguably, we're still above the 50-day. So, even though we broke it yesterday, I didn't want to stay. I don't want to become bearish, mostly because we've seen this recover so much. Like, I want like a meaningful drop below it, right? So if this was back in November 20th, I'd be like, oh, wow, this actually does not look good. So I bought the dip pretty heavy the next day. Why? Because we bounced off the 100-day moving average. Over here, I mean, there's really no dips to buy because I don't really have that much cash and I want to see a little bit more red before I deploy it. Plus, I don't really have a stock on the horizon yet. So got to kind of think about it. But I'm still bullish. I'm still bullish. I don't know how I can't be bearish this right now. Like, this looks pretty good. This looks pretty good. Like, hey, okay, fine. We're not all the way up here. But I'll tell you what, the setup looks a lot better down here than up here, right? Because what setup is there from up here? This is where you're taking some profits on some swings, right? This is not where you want to buy. And I'll show you a chart where you definitely don't want to buy. You don't want to be buying Microsoft all the way up here. Okay? Everyone remembers what happened this day. NVIDIA reported earnings. Those were really good numbers. And the market just went down after those earnings. Terrible. It was terrible. Actually, no. I think that was... Where's my NVIDIA? Oh, that was the 19th. Wow. Yeah, that was a brutal day. I did not see that one coming either. But if you bought NVIDIA up here, my friends, take your right hand, take your left hand, slap your wrist. You should not have done that. Very bad idea. If you were buying Robinhood up here, right hand, left hand, slap the wrist, guys. Do not do that. Do not do that. Iran, if you're buying $78, man, that's when everyone is bullish. You don't buy when everyone's bullish. You buy when people are not as bullish, especially for the long term. So how is Iran looking today as this classic example? I mean, it looks better, right? We're above the moving averages. That's good. The EMAs. All right. Iran's looking good over here. Is Iran a buy? Yeah, looks like a buy. But if it's a buy for a swing trade, you better have some stops in level. If we break the low of day, if we go below the 21 EMA on the daily, I would not. I would get out. I would get out. I own Iran. Long-term position. I mean, the portfolio has grown a lot, so it's not as big as it used to be. Nice. Staying above the 50 EMA on the Qs. Oh, wow. A short report on TE. I would like to get into this one just to research it. But there is a short report that just got released on TE. Oh, that must have came out this morning. Interesting. Yeah, I know a lot of people that are very bullish this one. Nate Dogg, was that you? Then that was you, Nate Dogg. Now's probably your opportunity. All right, so I think that about does it. A little bit of the what's this even a short step? Wow, that was an hour? Wow. All right, I need to like clip this up because I know you guys are going to want to look at this stuff later. Some of you guys might want to look at this stuff later, but appreciate you guys for tuning in. All 70 of you on the Wolf Financial channel and everyone else on the Twitter channel. Speaking of which, if you're on the Twits, not stock Twits, if you're on the Twitter, and I tried to pull that one from left field, didn't really work out too well, but thank you for following the Wolf_Financial on Twitter. While you're there, you might as well check out the youtube.com/@Wolf_Financial. How many times did I say underscore there? I hope I only said it one time. youtube.com/@Wolf_Financial. Check out the videos we got there. We have tons of stuff there. Gav is like interviewing people left and right. We got a few people over the weekend doing some stuff. Some great things happening there. We got some good interviews lined up later on, guys. And we got a special couple of guests on tomorrow on the Wolf. On the Solid Report tomorrow. Special couple of guests. Could be a little bit of a reunion. It'll be really cool. But yeah, appreciate it, guys. Thank you for tuning in. The market's going to close.